Hey guys, I hope you guys are doing good today. Tata Motors Passenger Vehicle just reported its highest ever annual sale, 6.4 lakh of units, records on EVs, highest ever record in market share. India growing business is 20%, and the stock which is down by 25% from its peak. That discount is what we are solving today. When you look at the India's business, basically Nexon, Tata Punch, and all their EVs, which contributes 15% of Tata Motors passenger vehicles of its actual profits, and their another 85% of the revenue, it comes from Jaguar Land Rover. And JLR just had a burst in the decade. So the real question is not whether India EV market is growing. It is super clear whether JLR has a bottom and whether 334 rupees it gives any margin of safety. Let's understand what's happened to Tata Motors passenger vehicle. Without wasting time, we can get into the video. Before that, if you're new to my channel, please do subscribe. Let's go. Let's start with what Tata Motors passenger vehicles actually do. This single chart, it explains everything. When you look at their consolidated revenue in financial year of 26, which is 3,35,582 crores. When you take India's passenger vehicles and the EVs, they are getting literally 58,000 crores. That is something 17%. And their Jaguar Land Rover, which is contributing 83%. When you look at the profit, it is even more skewed. Their JLR, it drives 85 to 90% of consolidated profit after tax in the normal year. You are not mainly buying Nexon or EVs. You are literally buying the British luxury car company. This is not something like a criticism. Range Rover and the Defender, they have genuine global moat. But if you did not know what's going in, then you are actually analyzing the wrong things. The India's passenger vehicles, which is 58,000 crores, which is growing 20%, that is something like a net cash positive. And when you look at the JLR, it has 22.9 billion euros and it is down by 21% as per today. When you look at their cash flow, it is negative minus 2.2 billion euros. The one engine, it is super clean, and the another one is complete breakdown. This is something an entire Tata Motors passenger vehicle story in just 2 lines. Let's start with the India's EV, which is a clean engine here. The India business has genuinely earned its number. When you look at the EV units in financial year of 26, which is 92,120, it is something like up by 43%, highest ever. When you look at the EV market share, which is like 40.2% of all passenger EV registrations, the total passenger vehicle sales is 6,41,587 crores. It is actually up by 15%. This is something like 5th consecutive record ever. When you look at the Nexon, which is #1 selling car in India in the second half of financial year of 26. Oh, this demand is structural. India, it imports 85% of the crude oil, running an EV cost roughly 1/4 of the monthly fuel bill of the petrol car. So that economics is doing the selling. This is something not like a government scheme. When you look at the India's standalone Q4 financial year of 26, the revenue is 18,700 crores. It is actually up by 49%. The EBITDA margin is 9.4%. The free cash flow is 1,700 crores in just 1 quarter. When you look at the net cash on the book, it is 6,700 crores. Here, the cash, it exceeds the debt. From this point of view, it looks like healthy. It is self-funding. Obviously, it is a growing business. If the passenger vehicles were only this, the verdict would be completely different. But it is not only this. Let's talk about the JLR problem precisely. There are 4 things it hits the JLR simultaneously in financial year of 26. Each one, I will label it as structural or temporary. This distinction, it matters the investment thesis. Problem number 1, cyber attack. I will label it as temporary. Now it is healed. In August 31, 2025, hackers, they have breached the JLR's system. Every UK plant, it shut down. 0 cars in September, not even 1. So their entire production, it was normalized on mid of November. So obviously, the 10 weeks, it has completely gone. So what is the cost they are paying for this? It is 196 million euros. The total lost volume is 237 million euros. The UK government stepped in with 1.5 billion euros. The loan has been guaranteed. When you look at the Q3 wholesale volume, it fell 43%. The North America, it fell 64%. Problem number 2, US tariff. I will label it as this is something structural and somewhere it is partially managed. You might have known this. US President Trump has imposed 25% of the tariff. Later, it was reduced to 10% for the UK cars, 15% for Slovakia Defenders. JLR, it manufactures UK and Slovakia. So the every cars going to the US, it obviously carries the cost. So the impact is 70 million euro in the first half. JLR is now considering keeping petrol models in US longer just to protect the revenue. This headwind does not resolve quickly. Problem number 3, the China luxury collapse. I will label it as structural. The problem is still ongoing. You might have known that the China, it has imposed the luxury tax in July 2025. The JLR China volume, it fell 46% in Q3. The domestic Chinese EV brands are building a comparable technology at the fraction of the price of Land Rover. So the JLR's CFO said it plainly, the China's luxury segment, it has continued to shrink. This is something an competitive structural problem. It will not reverse very quickly. The problem number 4, Jaguar brand gap. This is planned and badly timed. I will label it as temporary. The JLR killed the entire old Jaguar lineup to relaunch a pure electric brand. The new Jaguar Type 01, it has 1000 horsepower with 770 kilometer range. This is not something launched yet. So when you look at the financial year of 26, JLR, they sold 0 models of Jaguar brands. This is something an planned transition which is landing on top of 3 other headwinds. Let's talk about the result. When you look at the combined result, the revenue is 22.9 billion euros, which is completely down by 21%. When you look at the full year profit, which is 14 million euros, it is completely down by 99%, obviously from 2.5 billion euros. Their free cash flow, which is in negative 2.2 billion euros. I feel that is why this particular stock, it is down by 25%. So let's understand the JLR is recovering. Here is what the bears are missing. In Q4 financial year of 26, I mean the last quarter, when you look at the last quarter, their JLR, it generated 829 million euros, which is something in free cash flow. This is something looks like a positive in just one quarter. Their EBITDA margin is 14% and EBIT margin is 9.2%. This is something close to normal JLR quarter. Obviously, their cyber wound is healed now. The production is back to normal. When you look at the liquidity from the JLR, they have something like 6.9 billion euros. It is something including an undrawn facilities. There is no survival risk. Obviously, they do have a runway. Land Rover, Defender and Land Rover Sports, it has 74% of the Q3 volume even in their worst quarter. So when you look at from their brand mode, it is already intact. So the question is not in survival. It is something like a timing of recovery. So that is why exactly why the entry price is matter. Okay, now let's look into the profit check. Before my opinion, I need to flag one thing. When you look at the screener, it shows the trailing profit of 82,390 crores. That is not something in real operating profit. I will tell you what exactly happened. When you look at the Q1, they have 7,025 crores. This is something clean. And when you look at the Q2, it is reported 76,170 crores. So here is the thing. But 82,318 crores, that was an one-time accounting gain from the demerger disposal. Do understand, this is not an operation. When you look at the Q3, this is negative 3,486 crores. This is actually a loss due to a cyber attack quarter. When you look at the Q4, it has 5,783 crores, which is a complete and recovery phase. When you strip out all these exceptional items, their underlying consolidated profit before tax for financial year of 26, it is obviously negative 1,623 crores. Yeah, obviously it is a loss year. The standalone India's EPS from continuing the operations, it is like 10 rupees 43 paisa. This is obviously real. And I don't think this is not a fraud. I do see accounting is completely legitimate. So let's talk about the debts and the promoters. I would like to start with the 2 quick positives. When you look at the debt, their borrowing, it peaks 1,46,449 crores in financial year of 22. And today they have 79,109 crores. Obviously, this is down by 49%. Their net debt to equity, which is 0.8. Their India's standalone cash positive, which is 6,700 crores. So that is a one risk needs to watch. If the JLR's cash positive, it stays negative in financial year of 27, their consolidated debt, it may edge up. So we need to monitor each quarter. Okay, let's talk about the promoters. Obviously, the Tata groups, they hold literally 42.56%, zero pledging, not single share is pledged. Obviously, it is completely clean. Tata Group, they bought the JLR in 2008 at the peak crisis and they turned it into profitability by financial year of 24. They have done this kind of practice before. I give them the benefit of the doubt on execution. Let's talk about the valuation. The current price for this particular stock, currently it is trading in range of 334 rupees. The price to book value for this particular stock is 1.17. This is something trading exactly at the book value. Historically, it is a rare on Tata Motors Passenger Vehicles. The market has priced in significant pain. It's not my prediction. So there are 27 analysts. They predict this particular stock, it may hit 372 rupees. This is not something like I'm saying. There are certain analysts in the market, they are saying. Look at the P value for this particular stock is 20.6. When you look at the industry PE, it is like 27.8. It looks cheaper. It is less than industry PE. The book value is 304. ROCE for this particular stock is 2.73 and ROE is 5.58%. Okay, so what is my opinion on this particular stock? Am I going to buy this stock or not? At this moment, no. I am going to wait. Obviously, the business, it looks good. The promoter is also good, but the consolidated company, they lost the money during underlying of financial year of 26. Their operating cash flow, it fell by 79%. Looks like it is being asked to pay 334 rupees before the recovery is confirmed. This is not something like a margin of safety. If everything is clean, my entry zone for this particular stock is 295 rupees to 315 rupees. This is something near to 52-week low. I will be adding something like 2 to 3% in my portfolio, not more than that. There are certain triggers it needs to add for this particular stock. Let's wait for Q1 financial year of 27, which is on August 2026. If the JLR operating cash flow, it is in positive and the India's EV, it continues, then I will add few more stocks in my portfolio. So this particular stock, it's something we need to wait. We have to wait for the Q1 results of 27. Once the operating cash flow, it turns positive from the JLR side and EV is completely booming right now due to the oil crisis. If everything is settled, then obviously this stock, it is going to be in my portfolio. So finally, we have come to the end of this video. I hope you might have liked this video. If you liked it, please do hit a like button and please do drop a comment. I'm ready to read all your comments. We'll see you on another good one. Thank you so much. Bye-bye.